Ladies and gentlemen, boys and girls, welcome to FinFluential Media, and we all knew it was coming. We were waiting for that big tariff headline, and we finally got it today. Tariffs dominating the news cycle. And this is essentially why we can't have nice things in 2025, because there's just so much uncertainty. But we're going to talk about it today, guys. We're going to talk about tariffs, the market, stocks, and the gambling sector in 2025 and where it goes into 2029 for the rest of this decade. But before we get into it, go ahead, subscribe, hit that like button, guys. It's imperative that you subscribe to help small channels like mine grow. I would really appreciate it if you go ahead, hit that subscribe button or the like button. But let's get into it. Let's do a quick dive into the markets. And guys, very red across the board, particularly here in financials. Financials were pretty red. Tech was pretty red. Software was pretty red. And that meant the entire market was down. The S&P 500 falling in excess of 1%. But there were a couple of green sectors: energy, consumer staples, utilities, telecoms, right? So defensive sectors being very, very green today. If we break it down into individual stocks, look at the mega caps: Nvidia, Apple, both in the red. High beta down 7%, Robinhood. Then you see AT&T. This is a defensive sector. It's a telecom, up 1.24%. Also hardly impacted by tariffs. Almost all of their business happens inside America. And then you saw stuff like JP Morgan, right? Still red on the day, but not as impacted with the overall market sentiment. That was really the story of today. We really just had a sell the news event on the back of auto tariffs, even though we knew by Monday that we were getting it. We weren't sure of the details, but we do know what we are getting now. But before we talk about the actual tariffs, guys, let's talk about the S&P 500. It actually reclaimed its 200-day moving average despite the price action we saw today. So we actually slipped below it after 334 days in a row of being above it. That is a crazy trend. We slipped below the 200 moving day average. Generally speaking, if we do, you want to buy, especially if we don't get a recession. I don't think we are. And we actually have seen about a 4 to 5% move off the lows. We retook the 200-day moving average. That is good for the bears. However, it does look like we are going to use that as resistance and probably move lower, especially with tariffs dominating the news cycle. Now, Trump put 25% tariffs on all auto imports. It's just blanket tariffs on all imports coming from other countries into the US. And guys, now on Monday, we got Venezuelan secondary tariffs, right? So any country buying Venezuelan oil is going to see a 20% tariff on everything. Trump was asked, will this 25% tariff be included on the 20%? His answer was yes. We know China transacts with Venezuela a lot. Essentially, what you're looking at right here is China autos could see a 45% tariff, and other countries could see a significant increase in the overall tariff rate if they do transact with Venezuela. This could be a deterrent to either do business with Venezuela or the US itself. Very, very interesting times we live in. We're going to see how this develops, and we're going to talk about it first here on FinFluential Media. So go ahead and subscribe so you don't miss a beat. Now, guys, 9 million student loan borrowers are about to see their credit scores drop. More than 9 million Americans could see substantial declines in their FICO scores in the coming months as delinquent student loans begin showing up on reports for the first time since the pandemic, according to new analysis by the Fed. The report finds that over 15% of all student loan holders are likely now behind on debts, slightly more than before the pandemic. Those affected could face a tougher time getting access to home loans, auto loans, and see their credit card limits lowered. So what this essentially could tell us is that the lower end consumer could see a further pullback, especially if they can't get access to credit. And this is simply going to delay maybe that resurgence of like the housing market that we are expecting to drive growth this year. And that could essentially push out the rebounding of the residential fixed investment market, as well as other industries dependent on credit. We do know that home builders not having a good time with guidance. Look at Lennar, look at KBH Homes, right? This is going to show up. This is going to affect them. But we will see how this translates into the market. In the year and now, we shouldn't make any assumptions. We should just take the data as it is. Now, we're going to talk about the gambling market in Europe specifically. We got a report from the European Gaming and Betting Association, and it spells good news for evolution, guys. We're going to go onto my Twitter and we're going to read it. So for those of you that are new here, you can go ahead, follow me on Twitter. The handle is @FinFluentialX. I post a ton of very engaging content. So let's go ahead and look at what the European gambling has in store as it pertains to Evolution as well. I am a holder of Evolution Gaming. It makes up about 6% of my current portfolio. The European gambling market continues its growth trajectory, with total gaming revenues reaching 123.4 billion in 2024, a 5% increase from 2023. Land-based gambling revenues in 2024 was 75.5 billion. Online was 47.9 billion in 2024. Europe's gambling market is projected to maintain steady growth, reaching 149 billion in 2029. That is up from the 123 billion that we saw last year. Casino games represent the largest share of Europe's online gambling market, accounting for 45% of online gross gaming revenues in 2024, as you can see right there. 58% of online revenues in 2024 actually came from phones and tablets, and that should rise to 67 by 2029. So we'll continue to see the adoption of smaller form factors. And we do know that Evolution is putting a lot of emphasis on phone and tablet games as well, and building that for those users. Now, online gambling continues to gain market share against land-based, and that is expected to account for 39% of Europe's total gaming revenue in 2024, up from 37% in 2023. This isn't because land-based gambling isn't seeing year-over-year growth. It is growing. It's just that the digital adoption of online gambling is taking market share. This trend is expected to continue. Online gambling is projected to account for 45% of Europe's market by 2029, though land-based will remain significant at 55% of total revenue. Now, lottery, casino, gaming machines, and sports betting is to encompass the lion's share of the market. Online casino already makes up the majority of the casino segment, so don't expect any blockbuster growth from Europe like we will see in North America. And then looking at the individual segments and their projections, online gambling revenue growth has reached 47.9 billion in 2024, with strong growth across most products. Through 2029, online casino revenue is projected to grow roughly 7.5% annually, reaching 30.8 billion. And if we actually do some quick math, right? So we assume the 30.8 billion number right here and multiplied by 10, which is Evolution's take rate. Now, my checks actually have Evolution's take rate closer to 12%. I'm building in a bit of a margin of safety, and we assume the market share of 65%. I think their market share is actually closer to 75%. However, total available revenues. So we take the 30.8 billion, multiplied by 10%, we get 3 billion, right? So the total revenue up for grabs to casino suppliers is 3 billion. Evolution's market share of 65. So we take the 3 billion multiplied by 65%, and we get Evolution's share of the pie at 2.02 billion. So this would be the revenue in 2029. Assuming these figures hold true, Evolution could report revenues in Europe alone in calendar year 2029 of 2.02 billion. Just for context, Evolution did 2 billion in total revenues last year, and the stock trades 12.3 times. So here is Evolution's geographic revenue by quarter. You guys can go ahead and download this if you want. We've got their net revenue, share of unregulated markets, just some data for you guys to go ahead and have. And then that's pretty much it. So the gambling sector is expected to grow. As you can see right here, the casino segment is expected to grow. Evolution is expected to reap the rewards from that. And you have a strong secular trend and a strong cyclical trend forming, with the stock trading at 12 times forward earnings. This is very, very attractive. If you then actually go to the financials, go to its ratios, look at its efficiency ratios, right? Return on invested capital, 21.7%. Return on capital employed, 33.5%. And a free cash flow yield of 8.62%. This is a high quality business trading at a discount, with the trends clearly intact for this company to succeed in the future. Guys, have a look at this. 2 billion in revenue last year. We scroll all the way down to its margins, 100% gross margin, 55% free cash flow margin, right? This is absolutely insane. It's such a high quality company, and eventually the market is going to turn on this name. It hasn't done so well year to date. It's down about 8% year to date, but the market can stay irrational longer than you can stay solvent. And eventually the fundamentals and the stock price will align, and we will see the stock rebound in a very big way. It's why I'm long Evolution at 6% total in my portfolio. But if you've made it up until here, thank you so much for watching. If you like this video, please subscribe, hit that notification bell, as well as the like button, and leave a comment for the algorithm. Cheers.